Well, the federal election's over. We now know that Scott Morrison is going to lead the coalition government for another 3 years. So what does that mean to you, to the value of your home, to your wallets, to our economy and to our property markets? That's what I discuss in this special edition of the Michael Yardney podcast. That's what I discuss with Dr. Andrew Wilson as we unpack the results of the election with regard to the economy, some of the initiatives involved, and what is going to happen to our property markets. We're going to have a bit of a talk about when we believe the next interest rate movement's going to be and in which direction. Well, I think we all know in which direction it's going to be. When the property markets are going to turn, what it means for first home buyers, and what it means for our economy. So, welcome to this special edition of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
But already many people are asking, how will the outcome of this weekend's federal election affect the value of my home and our property markets? How will it alter our economy? And that's what we're going to discuss today in the special election edition of my regular Property Insiders chat with Dr. Andrew Wilson, who is Australia's leading housing economist and chief economist of myhousingmarket.com.au. Welcome, Andrew.
Thank you, Michael. Yes.
Well, I feel sorry for the gentleman who spent $1 million taking a bet. You probably read that online a couple of days ago, betting on the Labor government. I know a lot of other people thought it was going to happen, but he put his money where his mouth is.
Yeah, it was interesting, wasn't it, Michael? I think there was one of the bookmakers also suffered because they actually paid out for the result. They were so confident of the result that they actually paid out before the result. Be very wary of gambling. I think that's
yes.
Particularly when you're relying on the vagaries of opinion polls.
Well, now Treasurer Josh Frydenberg is going to be able to deliver on the budget he released last month. And I want to summarise how some of those promises made by the coalition could impact us financially, affect our wallets. But first, I'd like to concentrate on the property markets. Andrew, I see the re-election of the Morrison government as good news for our struggling property markets. How do you feel about that?
Yeah, I couldn't agree with you more, Michael. We've just been battered from pillar to post, our housing markets, over the last 2 or 3 years from outside forces. We really haven't let the market run its natural course. We had interference from APRA, the financial regulator, that tried to take, and it succeeded in taking the heat out of investor activity 4 years ago in the market. That caused a momentum shift in terms of prices, and we saw that impact itself into confidence across the board, with not just investors but owner-occupiers going on strike last year and into this year, concerned about falling prices. And this of course becomes self-reinforcing. And the media didn't do the market any positives either by ramping up the scare campaign. And really confidence, we had the Royal Commission, of course, into the banking sector. We've had a number of state elections and finalised with the federal election. And the centrepiece of that, of course, was reduction in the negative gearing tax allowance for investors and the capital gains tax allowance for investors. And this was just really the icing on the cake for creating that doubt and that fear in the market. So fog has lifted. We can now get on with the real business of buying and selling property.
Well, we're still in the slump phase of the property cycle. Prices are still falling.
Absolutely.
But there are green shoots appearing. As you say, last year investors and homeowners stopped buying, stopped selling. But you've been reporting regularly that things are slowly improving. Property prices are still falling, but the rate of decline is easing.
Yes.
Auction clearance rates that you report every week are improving. There was a bit of a slump the last couple of weeks because of these outside factors,
yes,
albeit on much lower volumes. buyers are coming back into the market, particularly if first home buyers have been encouraged by incentive packages. However, Andrew, we've got to be honest, there are still some headwinds. They're going to constrain our economy. Let's have a bit of a talk about inflation, wages growth, unemployment, those things that are still in the way.
Well, that's right, Michael, but these things are, I guess you'd say, material factors. They're concrete factors. They're not the abstracts that confidence can be. And fear is a very tough motivation to turn around. It's, confidence is like that big ship heading steaming in one direction, and either in a positive or a negative sense, it's very hard to turn that around. And as I said, I think the election result yesterday, in purely a non-political sense, in terms of its impact on the property market, can only help to realign the good ship housing market by taking away what has been for years now a significant fear factor, and that is the change to property taxes. I personally didn't, and as I've said on the show previously, I didn't think it would have a significant underlying effect on the housing market if we had had those changes to negative gearing, unlike a lot of the hysteria around it that was the fear-mongering in the election campaign. But I do think it was certainly a negative in terms of confidence in the shorter term as the policy was bedded down. And another hit to confidence is the last thing that our housing market needed. So we can, as you suggested, breathe a sigh of relief that finally, I guess, the last factor, the last unknown factor in terms of weak confidence has now been removed, and we can get on with looking at the real factors, as you mentioned, and how they affect the property market.
Well, one of the things that affects property market is affordability for homeowners and investors. And we know that APRA hasn't really loosened the screws that much yet. The way that banks look at mortgages with regard to asking you to service them at 7% is very unrealistic, especially in light of the fact that an interest rate drop is imminent.
Look, that's right, Michael. Sobering lesson if we do get an interest rate cut for both the Reserve Bank and APRA, because those measures that were introduced to reduce investor activity was supposed to offset the risk of higher interest rates, which both the Reserve Bank and APRA were quite confident were going to occur sooner rather than later. Of course, a cut in rates is a complete opposite to the direction of rates that were the underscoring of those activities to reduce investors. And in fact, lower prices, which is the result, of course, what the APRA was trying to offset, has occurred. So it's been a real issue in terms of mistaken policy settings based on the macroeconomy forecast, which now, of course, we've seen the Reserve Bank backtracking quite sharply in terms of where it now believes the Australian economy will head. And of course, absolutely, Michael, the latest data, certainly in terms of inflation, in terms of wage growth, and in terms of course, the jobs market, is now clearly pointing to a rate cut under the conditions that have been spelled out by the Reserve Bank. They've got nowhere to hide now, Michael.
Well, that suggests that we could even have a rate cut at their next meeting in June.
Well, I think so. I mean, what are they waiting for now? Unemployment is rising, wages growth has flattened, inflation is non-existent in the economy. We still don't have a lift in housing market activity. Of course, we still have clouds gathering over the global economy. And I think now is the time for that action. And, perhaps it won't be just a single cut going forward. But we don't want to fall into that trap of pushing rates down too much, because you then get to that point where you've got nothing left in the fuel tank, or no ammunition left in case we get a severe global downturn.
Well, let's break it down a bit to see how the coalition promises, if they follow them through, are going to affect various segments. But they still have to decide what's happening in the Senate as we're recording this. While it seems clear the House of Representatives is going to have a Liberal government, whether it's going to be a minority government or have majority isn't that clear. And so that's going to be important, as is the composition of the Senate, Andrew.
Well, that's true. But look, we've been working now for through a number of parliaments with a mixed bag in terms of the Senate. Perhaps it does give us some leverage or some moderation of policies. But I am a great believer, if you get a mandate, then you should be able to enact the policies that you went to the people with. without too much compromise.
Well, let's talk about the tax cuts, because there are some proposals in front of Parliament now. Probably 10 million Australians are going to benefit from tax cuts by removing this 37-cent bracket. A lot of people are going to get tax relief probably in September this year when they put in their tax returns this year. And looking further ahead, these tax cuts are going to occur over a period of time. It's actually quite a long time frame for these tax cuts to be implemented, Andrew.
Well, that's true, Michael, but it's all positive, and it is the dividend from a budget surplus now. It gives us the capacity to be able to stimulate the economy with tax cuts. A good thing, tax cuts puts more money in the pocket of taxpayers. A good thing, interest rate cut, it puts more money in the pockets of mortgage payers. And that's what we need now with wages growth just completely stagnant. We need to get people spending. We need to get consumption up and running. And the only way you do that, Michael, is to put money in people's pockets. And we're certainly doing that.
Well, if you're a small business owner, the government's going to give you tax cuts as well. The Morrison government promised to cut small business tax to 27.5% for businesses earning less than $50 million. And that's a lot of mum and dad businesses out there with a view to cutting tax rates further to 25%. Business confidence has been slumping a bit, Andrew. So this should also be a good sign.
Well, absolutely, Michael. And, that is about continuing jobs growth. It is about investment in infrastructure and inventories, which, of course, is another generator of economic growth. It's all about also encouraging aspiration and entrepreneurship in our small business sectors. Well, we need it in this stubbornly subdued and stagnant economy to get things moving again. We need to grease the wheels of industry, consumers, and generally give the momentum, bring back the momentum that we've really lost over the last 4 years, which the world has really lost by and large over the last 4 years, particularly in the sense of incomes growth.
Now, if you're a first-home buyer, there was some interesting news in the last week of the campaign where the government promised to assist a small group of first-home buyers, enabling them to buy their homes with a deposit of only 5%. They said that the regular lenders are still going to be able to lend to these people, but they're going to guarantee it rather than having lenders' mortgage insurance. I don't think the details are clear yet. I think you still have to meet the bank's strict lending criteria. And as we discussed last week, in my mind, it creates potential risks around lending to households who haven't had the savings discipline yet.
Well, that's true, Michael. I don't think it'll have a strong impact on the market overall. First home buyers, while significant, don't represent a large proportion of housing market activity. So, look, it's a good thing if you can get into your first home. I'm not going to naysay that. That's great. But I don't think it'll have a significant effect. You've got to understand that just because you can borrow 95% and have your mortgage insurance premium paid for you, you have to find, if you had been typically borrowing 80%, you have to find that other 15% extra that you borrowed. You have to be able to repay that. And believe me, there'll be no backtracking in terms of the requirements that the banks will still have for you to meet those extra repayments from your income.
Well, there's also some good news for people who've got shares, self-funded retirees. One of the scare campaigns that was run in this election was what removing the franking credits refund would do. Well, that's off the table now, isn't it?
Well, it is, Michael, and perhaps that was one of the significant factors that turned the Queensland electorate so strongly in favour of the coalition. A lot of retirees, of course, in Queensland. I think it affected most electorates to a certain degree. With interest rates so low now, self-funded retirees really are looking for every source of income, and to take the income of the franking credit away from them, with a lot of self-retirees have not large but small to modest portfolios, share portfolios, I think was a real kick for that particular group. And I think that was reflected in the election results at some level.
Well, if you're interested in climate change, a lot of people didn't vote for the major parties because they didn't have a strong policy, but the coalition has committed Australia to reduce its emissions by 26% on 2005 standards by 2030. And it's also doing other initiatives, including the Snowy version 2 and a number of other initiatives, probably not as much as some people who are interested in the climate change would like, but there are some initiatives in the right direction, Andrew.
Look, that's right, Michael. I think perhaps the Labor Party overestimated the importance of climate change to the electorate. I'm not trivialising it at any level, but I do think that those economic meat and potato issues in real time, that is now, were obviously shown to be more sensitive to voters than climate change.
And there's going to be some good infrastructure spending. But one of the things a lot of people are wondering about how it'll affect the property market are migration numbers. We had a recent Property Insider show where you gave your thoughts on migration and these changes.
Yes.
And you really said it's just fiddling around the edges. We're going to welcome 30,000 less migrants a year, but it's only bringing it back to about where the levels are today, Andrew.
That's right, Mike. And I do think our housing markets and our rental markets or house buying markets and house renting markets have suffered to some degree over what has been reductions in migration levels over the last 2 years. But I do think that there is a clear recognition, and always has been from most parties or from the major parties, that migration is a key to economic growth in Australia. And to maintain those budget surpluses, we need to maintain reasonably high levels of migration. And I think we will do that.
So in summary, business as usual, and possibly now the beginning of the end of the downturn. Yes. We can start looking forward to some green shoots appearing and a better property market as the years moves ahead, and an exciting property market in 2020.
That's right, Michael. Look, fear and confidence is very hard to address, particularly when we're talking about major purchases such as your family home or a residential investment. These are significant decisions that buyers make and sellers make, of course. And, it's difficult to remove uncertainty.
An interesting lesson comes from this, Andrew. We tend to worry about things which, in hindsight, when you look back in the past, aren't that important. We started the year worrying about the Haynes Royal Commission. We started the year worrying about the federal election. It's all over now. Life just moves on.
Well, that's right. And, you need a roof over your head, Michael. Property investment is still, as blue chip as it's ever been.
Well, one of the issues with the coalition winning is we're not going to have the fodder for these regular weekly property insider chats, because the scare about negative gearing, the scare about removing capital gains tax, all those other topics are now off the table. But I'm sure there's going to be lots more to discuss as we have these regular chats, Andrew. Thank you very much for your time.
Yes, thank you, Michael. I look forward to our next call.
Well, there's clearly a period of uncertainty ahead, and we're going to keep you updated regularly on the Michael Yardney podcast. But if you don't already subscribe to my daily property update, please go to propertyupdate.com.au, because there's everyday expert commentary from not just me, but a faculty of top Australian tax, finance, business, economic experts, so you can keep up to date, because I'm sure they're going to have a lot to say in the next little while. And if you got some benefit from this show, I'd really appreciate it if you passed on this information to others so they don't worry unnecessarily. At the bottom of every podcast app, there's a share button. So share it with somebody. Let them know about it. And since you've listened so far, let me share with you some nice words that have been left. Every week we get new reviews, and I'm really appreciative of those. And if I read them out, if I read yours out, email me at michael@metropole.com.au, and I'd be happy to gift you one of my books as a way of saying thank you. Big Dog Ray left a review earlier on. He said, "Hi, Michael. Very enjoyable words. I've been trying to relay that people are only entitled to what they earn. If everybody stopped chasing happiness and strive for a more joyful lifestyle, they'd have a lifetime of happiness. I've recommended your podcast to a mate who's looking to buy in Canberra. Look forward to more material from you. Thank you." Well, thank you for that review, Big Dog Ray. And there was also another one from Daniel J88 who said, "I've been listening to Michael's podcast for a year now and have been dissecting each and every episode in order to learn from his wealth of knowledge. When it seems that everyone in the property investment space is selling a get-rich-quick scheme, it's refreshing to know the long-term gains attributable to following Michael's proven strategies." So thank you so much for those kind words, Daniel J88, and I look forward to speaking with you again later on. Remember, this podcast now comes to you twice a week, so in the meantime, spend your time wisely.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?